You know, it's amazing when you think about it. Gold, it just keeps popping up everywhere, right? Throughout history, I mean. Ancient empires, and suddenly it's in our phones. Even a tiny bit can just make a necklace look so much better, you know?
It really does seem to transcend time and cultures, like it's built into us somehow, that fascination.
Yeah. And that brings us to what we're diving into today, investing in gold. But, before you start picturing yourself like in some vault surrounded by gold bars, we want to be clear. Today we're talking about ways to get in on gold without needing to build a vault yourself. And actually, this feels pretty relevant right now, Thinking back to when the pandemic was really hitting hard, like August 2020, gold prices were crazy, over $2,000 USD.
Yeah, that was quite a spike.
Huge, especially compared to just the year before in 2019, where it was, around 4,485 USD. It definitely makes you stop and think hey, maybe gold is something worth having, especially when things feel a bit shaky.
Exactly. I mean, if we zoom out and look at the bigger picture, that jump in 2020 really showed why gold is often called a safe haven asset. When the markets go haywire, investors tend to run to gold because it's seen as a more stable store of value.
Right. And it's not just about uncertainty either. You can't ignore the whole inflation thing. Everything's getting more expensive. And gold, well, historically, it's been a decent hedge against that. Since there's only so much gold in the world, its value usually holds up, even when prices of, everything else are going up, so it helps protect your buying power a bit, especially when interest rates are low. So that's kind of the landscape we're in, and that's why we're doing this whole deep dive, to explore the different ways you can invest in gold, to give you the basics, the important stuff, without making you feel like you just got lost in a gold mine.
Exactly. No need for hard hats and headlamps here.
Exactly. So let's get into it. What are the main ways anyone listening right now, can actually invest in gold today?
Well, there are actually quite a few ways to do it, but I'd say, based on what we've been looking at, there are four main methods that come up again and again. One, you can buy physical gold. Two, there's something called gold-linked structured commodity investments, which we'll unpack in a bit. Three, you could look into gold ETFs or mutual funds. And lastly, you could buy shares in companies that actually mine the gold.
Okay, so four solid options. Let's start with the most obvious one, the one that probably comes to mind first for a lot of people. Physical gold. What does that actually involve for someone who's like, okay, I want to get me some gold?
So when we talk about physical gold as an investment, we're usually talking about two things. Gold bullion, which is like those bars or ingots you see in movies.
Ah, the classic gold bar.
Yeah, exactly. And then there are investment grade coins. The key here is investment grade, which means the gold has to be really pure, at least 99.5% pure gold. We're not talking about, gold-plated jewelry or anything like that.
So the real deal.
Yeah,
got it.
Exactly, pure gold. Now, bullion, those bars, they usually have a stamp on them that tells you who made it, how much it weighs, and how pure it is. They come in different sizes, too. You can get tiny ones, like 1/10 of a troy ounce. And by the way, a troy ounce is just the standard unit for measuring gold. It's about 31 grams. But you can get bars that weigh a whole kilogram. Then you've got gold coins. These come in all sorts of designs and sizes. And some of them are actually legal tender in the countries they're from. Like, for example, UK gold sovereigns.
So I could, technically buy groceries with them?
Well, technically, maybe, but you probably wouldn't want to. I mean, think about the change. And then there's the fact that some coins are worth more than just the gold they contain because of their design, or if they're rare. Yeah, kind of like a collector's item.
Like those limited edition sneakers that end up going for thousands of dollars online.
Exactly. So yeah, where do you actually buy this gold? Well, you can buy it through some banks and brokerage firms, but the most important thing is to go through a source you can trust. Ideally, you'd want to find a good local dealer, someone you can talk to face to face. It's always better than relying on some random website you've never heard of. What's interesting is our research actually mentioned that Singapore can be a really good place to buy gold.
Oh yeah, why is that?
Because of the taxes. So in Singapore, gold is classified as an investment precious metal, which means it's exempt from GST. It's like their sales tax. So you can save some money there.
That's a good tip. So maybe a trip to Singapore is in order. Okay, you mentioned gold jewelry before. That's a whole different thing than buying gold bars, right?
Oh yeah, completely different. See, gold jewelry does have gold in it, obviously. But buying it isn't the same as investing in gold bullion. Because when you buy jewelry, you're not just paying for the gold itself. You're also paying for the craftsmanship, the design, the brand name, all that. And those things don't necessarily change in value just because the price of gold goes up or down. Plus, in a lot of places, Gold jewelry is subject to sales tax, whereas bullion often isn't, like that GST in Singapore, for example. Of course, jewelry can have other kinds of value, like say it's an antique or a family heirloom, but that's more sentimental value,
Yeah.
right? Not necessarily financial. So yeah, that gold necklace might look amazing, but it's probably not the best way to invest in gold itself.
Makes sense. So let's say I've taken the plunge. I've got my gold bars or coins. What do I do with them? I can't just keep them in my sock drawer, right?
Definitely not. Security is super important. Most people who invest in physical gold keep it in a safe deposit box at a bank or even a private vault. You don't really want to keep a lot of gold, especially coins, lying around your house where someone could just
Yeah.
take them. And then, of course, you've got to think about insurance in case something does happen. Actually, some insurance companies have rules about how you have to store your gold before they'll even insure it.
Makes sense. It's like winning the lottery. You wouldn't just leave the ticket lying on the kitchen counter. So security, insurance, check. Anything else to keep in mind with physical gold?
Well, one more thing. Verification. It's super important to make sure you're buying from a reputable seller because there are shady dealers out there who might try to trick you. They might mix other cheaper metals into the gold, so you're not actually getting pure gold. Or they might even try to pass off something like tungsten as gold because it can feel surprisingly similar. So yeah, always make sure you're buying from a legitimate source. Like, look for dealers who are registered with a recognized authority. Like in Singapore, you'd want to look for someone registered with the Monetary Authority of Singapore. And then, of course, you can't forget that the price of gold, like anything else, it goes up and down. It's not fixed. So the value of your physical gold is always going to be fluctuating.
Okay, so bottom line. Buy from trusted sources, lock it up tight, insure it, and buckle up for the price roller coaster.
Got it. Okay, let's move on to something that sounds a bit more mysterious. Those gold-linked structured commodity investments. What are those exactly? Right, so these are a way to get into the gold game without actually buying the gold directly. It's more like you're making an agreement with a bank or a brokerage firm, and you're betting on how the price of gold is going to change compared to another currency. So you agree on a time frame, a base currency like, say, US dollars or Singapore dollars, and then a target conversion rate, or TCR. The TCR is basically like a set exchange rate between gold, which is also known as XAU in the financial world.
So XAU, that's just like the ticker symbol for gold.
Exactly. It's like how USD is for the US dollar. So you're basically betting on whether the price of gold or XAU will go up or down compared to that base currency like the USD over a specific period.
Okay, so it's like instead of buying gold directly, I'm linking my investment to how well gold performs against another currency.
Precisely. So when the investment term is up, how much you get back depends on how well gold did against that base currency. Let's say you bet that XAU would go up compared to the US dollar. If gold goes up, you'll usually get back your initial investment plus some extra money, like interest, in US dollars. But if gold goes down, you'd get paid back in gold in XAU, based on that pre-agreed TCR.
So there's a chance you could actually end up with gold instead of cash.
Yep. And what you do with that gold is up to you. You could hold on to it, hoping the price will go up later. You could sell it for cash. Or you can even reinvest it into another gold-linked investment. It's like a whole gold-based ecosystem.
Sounds pretty complex.
Yeah, it can be. And remember, gold, like any currency or commodity, it can be volatile. Prices go up and down all the time. So these gold-linked investments, they're not for the faint of heart.
So not for someone who just wants to dip their toes in the water.
Yeah. Right. These are more for people who understand how things work, how prices and exchange rates move around. They can potentially offer bigger returns than just holding on to cash, but there are also bigger risks. You could lose some or even all of your initial investment.
So a higher risk, higher reward kind of thing. Got it. Okay, let's move on to something a little more familiar for most investors. ETFs and mutual funds that focus on gold. So if I'm not really into the whole physical gold thing or playing with currencies, what are these all about?
Okay, so with a gold ETF, a gold exchange traded fund, you're investing in gold without actually buying the physical stuff. Think of it like a basket of gold-related assets, kind of like a mutual fund, but specifically for gold. Some gold ETFs track the price of physical gold directly, meaning they hold actual gold bars in secure vaults, while others might include shares of gold mining companies or some gold-related financial products. It all depends on how that specific ETF is structured.
Okay, so it's like I'm buying a piece of a bigger gold pie.
Exactly. And the cool thing about gold ETFs is that they trade on stock exchanges, just like any other stock. This means they're really easy to buy and sell, and they usually require less money up front compared to buying a whole bar of gold. So they're a good option for someone who wants to invest in gold without having to handle it directly.
Makes sense. Now, how about gold mutual funds? They're similar, right?
Yeah, similar, but with a key difference. A gold mutual fund, sometimes called a UT, is also a collection of gold-related assets. It might hold physical gold, shares of gold mining companies, or other stuff, but the difference is in how they're managed. Mutual funds have fund managers who are actively buying and selling assets within the fund, trying to get better returns than just tracking the gold price directly.
So they're not just trying to keep up with the market, they're trying to actually beat it.
Exactly.
Yeah.
But of course, that active management comes with a price. Mutual funds typically have higher fees than ETFs.
So it's like you're paying for their expertise.
Exactly. And, whether you're looking at ETFs or mutual funds, always do your research. Check out the companies behind these funds. Make sure they're solid, reputable companies. And always look at the expense ratio. That's how much they're charging you to manage your money.
So ETFs and mutual funds are kind of a more hands-off way to get into gold, but you got to do your homework first.
Got it.
Now, the last one on our list, investing in gold mining companies. This sounds a bit more indirect.
Right. So instead of investing in gold itself, you're buying shares of the companies that actually dig it up.
So I'm betting on the miners, not the metal itself.
Exactly. The idea is that if the price of gold goes up, the value of the gold those companies have in the ground also goes up, which should, in theory, make their stock price go up.
Sounds logical. So is this a good way to play the gold market?
It can be, but it's not that simple. See, the performance of a mining company depends on a lot of things, not just the price of gold. It depends on how well the companies run, how efficiently they can mine the gold, and other factors like regulations and global demand for other metals.
So it's more than just gold goes up, stock goes up.
Right. There's more risk involved because you're also betting on the company itself, not just gold. But there can be some upsides too. For example, mining companies can sometimes pay dividends to their shareholders. So that's a bit of extra income on top of the potential stock price increase. And some mining companies, if they're well managed, can actually adjust their operations if the price of gold drops so they can stay profitable. That's something you can't really do with physical gold.
Interesting. So it's a bit more of a gamble, but with potential benefits.
Exactly. And it's interesting. Our research mentioned Warren Buffett, the famous investor. His company, Berkshire Hathaway, recently invested a lot of money, almost $500 million, into a gold mining company called Barrick Gold.
Wow. That's a pretty big vote of confidence.
It is. It shows that even some of the biggest, most experienced investors in the world see potential in gold mining companies, not just the gold itself.
Yeah.
So yeah, definitely something to think about.
Definitely a lot to consider. Okay, so we've covered a lot of ground here. Physical gold, gold-linked investments, ETFs, mutual funds, and mining stocks. It's a lot to take in. So if someone's listening to this and thinking, okay, I'm interested in gold, where do I even begin? What's the one piece of advice you'd give them?
Without a doubt, the most important thing is to talk to a financial advisor, a real qualified professional. They can help you figure out how much gold makes sense for you to invest in and which method is best for your specific situation. Everyone's different, You have to consider your own financial goals, how much risk you're comfortable with, and what's happening in the market right now. And the goal should always be to build a balanced portfolio, not just put all your eggs in one basket, even if that basket is made of gold.
That makes a lot of sense. So before we wrap things up, let's just do a quick review. We started with the classic approach, buying actual physical gold, whether it's bars or coins. We talked about how important security is, finding a good source, and remembering that the price of gold can be unpredictable. Then we got a bit more adventurous and explored those gold-linked investments, which are a way to bet on how gold will perform against other currencies. We also looked at gold ETFs and mutual funds, which are popular and easy to buy and sell, but it's crucial to understand what those funds are actually holding. And finally, we discussed investing in gold mining companies, which is a way to get into the game indirectly, but with its own set of risks and rewards.
It really is fascinating how many different ways there are to invest in gold,
Yeah.
And it makes sense when you consider how versatile gold is and how it's used in so many different industries. It's not just a shiny metal anymore.
That's a really good point. So, listeners, you've now got a good overview of the landscape, the basics, the important things to consider. Hopefully, this will help you make smarter decisions or at least ask better questions if you decide to talk to a financial advisor. And that brings us to our final thought for you to ponder. Gold has been around forever, literally. It's been valuable for thousands of years. But we also live in a world that's changing faster than ever, a world where everything is becoming more digital. So how will gold adapt? How will its role change in the future? Will it still be this safe haven asset, or will it become something else entirely? These are the kinds of questions worth thinking about. Until next time, keep exploring, keep learning, and keep those questions coming.